Hi everyone, this is June from Turning Point Life Investment, and this video is for the week of August 1st, 2008. Let's take a look at the market starting with a monthly view. So coming in from these analysis, I will stop doing the monthly view until actually the end of the month, because it does get a little redundant talking about the monthly stuff when nothing really much changes throughout the week. So looking at the monthly, we are still trading under the 50-month moving average, as you can see here. We did end this month in the doji, which tells us there's probably a temporary stop to this decline. A little more of this consolidation, more sideways churning action that's probably going to be expected. Still, the momentum, overall momentum, is still towards the downside. You can see from the high volume, as well as the stochastic and the MACD, both pointing downwards towards a negative momentum. From a weekly view, our immediate support obviously is still at 120 right here. If the 120 does break, look for support at 115. So we have a clear 5-point drop if 120 does give out. Okay, right around here. As you can see, 2 weeks ago we had a nice hammer. A hammer is a bearish, it's a bullish reversal candlestick. So unfortunately, the momentum did not really carry on. Right? If we had a nice bullish rally, we would probably come up towards this area and tag the 20-week moving average. Unfortunately, the candles, as you can see, it basically says that expect more consolidation, sideways consolidation to carry on for this week, possibly into next week as well. Right? Okay, let's take a look at the daily view. Daily view, same thing. Right? A lot of churning, a lot of sideways, really a whole lot of nothing. You know, we're basically stuck between 129 here, underneath the 50-day moving average, and 120. So, you know, my best advice as far as trading is concerned, stay clear until the market really does get out of this sideways action, right? Either a break towards the upside or break towards the downside. So if you're going to trade in this consolidation pattern, unless you're day trading, then that's fine. Otherwise, if you're going to hold it for a swing trade, good luck, because, you know, the chances of you getting stopped out of your trade is pretty high. Now, a good strategy to trade a sideways market is probably an iron condor. Basically what you do is you sell bear call spreads above the range and below the range. So I would sell bull put spreads beneath here and bear call spreads above 129 up in this level. And basically you have 2 weeks left into this month, so you have 2 weeks to hold and let those 2 legs expire and basically collect the premium from that point. So one thing I do want to recap, as I mentioned, you know, trading this decline was pretty easy. You can just basically buy puts, short the market, whatever, and you will make money. But right now the market's a little different. We're going sideways. So you have to adapt and basically change up your strategy according to what the market presents itself. And right now it's going sideways. So what worked then is really not working right now. Alright? So switch it up a little bit. Looking at the hourly view, same thing. It's telling us a whole lot of nothing. Right? When we're trending, easy to trade. Right now, a lot of choppy. See how it's going in and out of the moving average right here? It's following the moving average right here, in and out, in and out. Okay, so there's really no signal. If you're a trend trader, right now is not your time to trade. Okay, so wait for the market to present itself. Like I said earlier, you know, there's time to trade and when there's time to sit out on the sidelines. And right now, I would much prefer just stay cash or at least sit out on the sidelines or at least go lightly in a position instead of going all in. Okay, then again, you should never always go all in anyway, regardless. So looking at the VIX, let's look at the VIX to see if it tells us anything. Same thing, right? Same thing. A lot of sideways action, nothing much going on, pretty boring. Okay, take a week off, 2 weeks off, whatever it is. There's really not much to look at in the market right now. Okay, the market is setting up a volatility squeeze. What's going on is that it's contracting. Okay, it's contracting, it's slowing down, it's basically getting ready to pounce, all right, like a lion pouncing on a gazelle, whatever. Okay, so right now that's what it's doing. It's setting itself up, it's winding itself tighter and tighter. So once we get that push, it will go towards whichever side we push. Okay, don't anticipate the push, but wait for it to happen. Once it does happen, it's going to be pretty apparent as to which side the market will lean towards, right? But in the meantime, do not try to anticipate or predict which side the market will you know, tilt towards. Okay, looking at the open interest, same thing. This is the call side open interest. This is the put side open interest. The only thing that does pop out is once again 120. That still remains a pretty high open interest strike price. So expect to see really good strong support there. From the call side, I would say 128. 128 does stand out. So if the market does rally, expect some kind of resistance right around the 128, 129 level, right around there. So once again, just to recap, nothing much. Like I said, if there's ever a time to go on vacation for the summer, I'd say you can do it now. Um, you know, the market is working itself out. We had 2 months of decline. Okay, so expect to see at least a month or 2 months of consolidation just to harmonize the market. Okay, so just allow the market to work itself out. But in the meantime, really, I would say trade lightly or don't trade at all during this time for this week, possibly till the end of August. Okay, I'll talk to you guys next week.